Hi guys, thanks for joining me. This might actually be the first of many videos. It depends what sort of response I get. If people comment and say, yeah, we want more videos like this, then I'll do more videos. I'm doing this video as a first video for a couple of reasons. I want to show you a setup. I'm from, obviously probably tell by my accent, I'm from the UK, and I've just opened my trading account back up to trade FTSE 100 companies, maybe FTSE 250 as well, but UK shares. I'm going to be trading UK shares. I've got a beautiful setup. I'm going to talk you through the whole thing, show you exactly what's happened with this company. It's at a beautiful point to sell, or it's very nearly at a beautiful point to sell. I'm going to talk you through everything, and if you're relatively new to trading, you're probably going to learn a lot from this video, so that will come next. What I want to talk to you about is a little bit about my story. I'm not going to go into too much detail about what I do, but I'm an analyst and I work closely with markets. I'm not going to go into any more detail. I studied economics and maths at undergraduate. I've done a master's in risk, and I'm also the author of this book, which is quite good if you're into investing in shares and things like that. So what I want to talk to you about is I used to trade mainly Forex, US indices a little bit, the odd trade in gold. But what I found was I gave up because Forex was a weird thing. I learned so much about charts, trading, entries, exits, stop losses, risk management. I learned so much, but it's difficult to say, but I sort of got very frustrated with stop loss hunting. And when I first heard in interviews people saying about stop loss hunting, I thought it was a little bit conspiracy theory. But when you see it over and over yourself, you're getting stopped out of very good trades only to see the market go your way. I'm getting fed up of this. People are just taking my money off me, and I don't deserve that, because actually the market is now at the point where I would have taken profit, but I got stopped out. So I'll give you an example of something that happened to me. I was long, I think it was the pound and Aussie dollar. I was long, and it had this support line, and I was like, right, okay, let's put our stop loss below the support line, like a good chunk below. Let's give the market a little bit of breathing space. So I put my stop loss quite a bit down. The market was bouncing off the trend line, broke through it, hit where my stop was, went a couple of ticks lower, and then shot right up above the trend line, and actually went to where I was going to take profit. I can't remember, I probably lost about £150 on that when I could have made about 300. And it was like, this is stop loss hunting, this is what I've heard of, and I just got sick of it, and so I gave up. But I learned so much, and you'll see from the analysis part of this video, I think you'll see the sort of trader that I am, and I'm hoping that by the end of this year, I want to be trading for a living at home, being self-employed. That is my dream. That is what I want to do by the end of this year. So we're in February at the moment. By the end of 2019, I want to be trading for a living. That's what I want to do. So this is my journey, and hopefully if I get a good engagement on YouTube, I'll keep making these videos. Or maybe at the moment I'm talking to my phone in my bedroom, so I'll do something a bit more professional, but it depends. If no one's going to watch these videos, there's no point. Something that I do want to say, I want to document this, because I want to talk about this in months to come and say, look, I see this coming. I'm seeing a lot of markets, shares, I think gold, a lot of indices, but a lot of companies, a lot of stocks are at the 200-day moving average, or at their 200-day moving average. And I've seen this happen a couple of times, and it normally means when lots and lots of markets are hanging on to that 200-day moving average, it normally means you're going to get a big gravitational shift in the markets. And happened before the 2008 credit crisis crash, and it happened, I think it was 2010, the European debt crisis, when the markets pulled off quite a lot. All of the markets were sort of hanging at this 200-day moving average, and I was like, this isn't right. And then all of a sudden, boom, we had a big down move. So I think we're going to get a couple of big movements in the market, and I think on the downside. Now, I'm being I'm filming this. What's the date today? I think it's like the 7th of February 2019. So I just want to document this, that this is something that I noticed. And I've got a company that I'm short, and next week I'm looking for confirmation that I can sell another company in the UK. So I'm going to talk you through that now. Hope that you learn a lot, and subscribe if you want more videos like this. This chart is a daily chart, and it's for BAE Systems. Their ticker is BA dot. And one thing that I've noticed is since late 2011, the price has allowed me to draw this trend line. You can see how many times we've bounced off the trend line and gone higher until potentially, I'm not sure, this looks a little bit like a double top to me, a massive double top. And what happened was the market broke below the trend line. It's the first time since the trend line started in sort of 2012 that we've been underneath this trend line. And I think that is very, very significant. If we zoom in a little bit, you can see that what's happened is the market's broke down and now it seems to be back testing. Can you see that? So I'm very interested. Let's just recalibrate this. You can see something similar happened here, by the way. That's why I drew that in. And the market broke down quite a lot thereafter. Here we go. So you can see that what's happened is that the trend line got violated ever since we've rallied. And I think there's potential for the market to rally a little bit more. Perhaps it wants to get up and test, maybe get a bit above this. And then we're looking for it to fail, basically. So what I would say is that even though we suspect that this market, the uptrend line has been violated, I think a new downtrend is going to be in play. On the hourly, this will be a very bullish setup. The short-term momentum is actually up. So I don't want to be jumping in and selling this. What I want to see is, you see this trend line, this short-term trend line. I want to see the market do whatever it wants to do and then close below this on the daily. Then I will look to sell a rally in the hourly. That is how I'm going to trade this. And I think easily you're looking at this band here between £4 a share and 4.20 per share. I think that is a very viable target. And I think that is where this company is going to go. I think that you could potentially see a lower price, but to start off with, let's wait for a close below this, and then the price can come down. I want to show you something else as well. Let me just show you while I've got you here. This is a short that I have already, Associated British Food. And I just want to show you what I'm seeing here. So basically, I think that the market's in this channel, the down channel. And you can see what's happened was we put in a high, put in a low, put in a lower high than this one, put in a lower low than this one, put in a lower high than this high, put in a lower low than this one. It looks like we've put in a lower high to this high. And if that's the case, the pattern would suggest a lower low. And I think that you could see about £19 per share, maybe just above that. And the other thing that I noticed, two other things here. Short-term trend line, which is a counter trend line, got broken on Thursday, dumped again on Friday. But also look at this. This is the 200-day moving average. The market went up to test it, couldn't get above it to test the top of the channel. It literally failed at the 200-day moving average ever since we've broken down. I actually think that the hourly is a little bit overstretched on the downside. So I wouldn't be surprised to see either on Monday or Tuesday a little bit of a green candle here. And then you'll basically let all the indicators reset, become a bit more neutral, and then you'll get the next down tick. So I think that potentially we might see a bounce around £22.50 per share, but ultimately I think that this is going to about £19 something a share, and that's I'm short already on that one. But like I say, I think this is a market in a lot of trouble. Look how quickly it went up. Sorry about that, dog barked and it made me jump. So yeah, it's in a channel, and I suspect that on balance of what we're seeing here, I think that the market wants to come down. I think we'll see £19.20 per share ish, and potentially a lot lower. But this is a massive price for this stock. You know, if it breaks below this, then the downside is where the market went up so quickly. The downside could be quite
it could fall quite quickly as well. So that's what I wanted to show you. And like I say, if you like, comment, subscribe, then I'll do more videos like this for you.